Good afternoon, everybody. Seth Little here for Jeffords Anthony Law Firm in Ridgeland, Mississippi. Wanted to bring you a new video today on a big issue that's come up lately with the One Big Beautiful Bill. It's something that President Trump brought up a ton in his campaign, a big promise that he made, and probably helped him win some of these states with a big hospitality industry, such as Nevada, and that is the no tax on tips. Now, a lot of y'all probably have heard this just through the presidential campaign and probably don't know really what it means. So I'm going to go over that today. And if you are in the service industry and you do work for tips, this is an important video for you to understand exactly what no tax on tips means and what you need to do to be able to take advantage of that. So, number one, what is no tax on tips? It's not exactly what it means or what it says by saying no tax on tips. It's actually a tax deduction. So basically, what this is, if you make income in the form of tips, you are able to deduct a certain amount of that from your income and for your income taxes. For example, if you make $50,000 in income and 20,000 of that is from tips, then when you go to do your taxes and do your tax return, you will be able to claim a $20,000 tax deduction for that amount of tips that you made. And that's also an above the line deduction, which a lot of you probably don't know the difference or what that means. Basically, an above the line deduction is the type of deduction that you would prefer when it compared with below the line. That deduction is deducted from your adjusted gross income before your income is applied to the tax rate. So if you make, like I said, $50,000 in gross income, before you get to multiply your income by the rate of tax to come up with how much you need to pay in taxes, that $20,000 that you made in tips is deducted above the line, meaning by the time you get to apply the tax rate to your income, that $20,000 is subtracted from the $50,000. So when it's above the line, that means your adjusted gross income will only be $30,000. And why is this important to have above the line deduction? If you have an above the line deduction, you can still take advantage of the below the line deduction, which is the standard deduction that everybody has. So you can still claim this no tax on tips deduction, and then you can still go below the line and have your standard deduction that everybody has on their tax return. So it's a very good deal in the sense that you can have the above the line deduction and still have the other deductions and really lower what you pay in taxes. So who qualifies for the no tax on tips? The IRS has actually listed nearly 70 occupations that meet this criteria of someone who can be qualified for the no tax on tips. It's not just limited to the obvious ones like bartenders, restaurant servers, waiters. They've actually grouped these occupations into 8 categories. So what we have is number one, beverage and food service, your waiters, your waitresses, bartenders. Entertainment and events. This means musicians, DJs, ballet attendants, hospitality and guest services. That's your hospital bellhops, your concierges, home services. These are house cleaners, home maintenance workers that may get tips. Personal services. Those are your hairstylists, your barbers, nail technicians, massage therapists. You have personal appearance and wellness. That's similar to the barbers and the hairstylists, but that might also include people that work at a spa. Recreation and instructions, that would be your golf instructors, your ski caddies, tour guides. And then you have the transportation and delivery, which of course is your taxi drivers, your Uber drivers, food delivery drivers, and those such things. So if you fall into one of those 8 categories, then you are able to take advantage of the no tax on tips. The important thing is the IRS has categorized this as occupations that customarily receive tips. It should be worth checking out for you if you think that you might fall into one of these categories. It's very broad. So I would recommend that you go to the IRS website and see if you fall into one of these categories. So what is a qualified tip? Of course, you have your customary cash tips. Those are obviously considered a qualified tip. Tips left on credit cards are also included. Debit card tips are included. If you get a tip via a gift card, that's also included. And most importantly, with the more modern age, the payment app tips are also included. So if you get paid tips in the form of Venmo, PayPal, or any digital payment platform, those are considered to be qualified tips. A big consideration with this, however, is they must be paid voluntarily by the customer. This can't be something that is tacked on to a bill like a service charge or an automatic gratuity or something like that. It's got to be what they call subject to negotiation. It's got to be the choice of the customer to give you that tip. So if it is something that's just automatically added to a bill, that does not count as a tip. That can go towards this deduction. If you pull your tips, if you're working at a restaurant and your tips are pulled, as long as they were voluntarily made by the customer, you still would get to use that towards your deduction. What are some of the limits on the no tax on tips? So this is one of the most important parts right here. Obviously, you can't deduct 100% of the tips you make if they go over a certain threshold, unfortunately. So $25,000 is the threshold. So you can deduct the amount of tips you make in a year up to $25,000. Anything over $25,000 would be subject as regular income and would be taxed. So if you make $30,000 in tips, you can deduct 25,000 of that, and the remaining 5,000 would still be subject to federal income tax. Another crucial limit on this depends on what your AGI is. So if you make over $150,000, then any dollar you make above that $150,000 will gradually reduce the amount that you're able to deduct on your no tax on tips. You want to consult an accountant on that if you have over $150,000 in adjusted gross income. If you're filing jointly, that threshold is $300,000. So if you believe that you're going to make above that, or you do make above that, then you need to consult an accountant to see exactly how much of the $25,000 deduction for no tax on tips that you're able to claim on your tax return. If you're self-employed, your deduction for qualified tips can't exceed what your net income is from that business. So you need to see, if you're self-employed, what your net income is. If your no tax on tips deduction exceeds that, then you're not going to be able to use it, because the IRS doesn't want you to be able to use that deduction to effectively create a net loss for your self-employed business. Now that we've learned what the no tax on tips is, it's actually a tax deduction up to $25,000 for if you fall into one of these designated businesses that the IRS has designated as qualifying under the no tax on tips, and your gross income falls into what the parameters are, then you can take advantage of this. What are some other important considerations for this? Obviously, you need to take good records. If you're in a restaurant or somewhere where tips are pulled, and that's obviously clearly stated in your statement that you get every month about your tips, and that's pretty easy to keep up with. But if you get tips electronically through Venmo, PayPal, if you get cash tips, if you say you're a musician and you're getting cash tips while you're playing somewhere, obviously you've got to keep records of that. You got to keep up with it, and it basically falls on you to do that. And remember, this is a deduction. This is not something that you can just leave off of your tax return. So that's what's kind of confusing about the title, no tax on tips, is many people may read that and say, okay, I made $20,000 in tips last year. I just don't need to report it because no tax on tips, right? No. So this, like I said, is a deduction. You still need to report it on your tax return as tip income that can be used as a deduction to figure out what your adjusted gross income is. That way you can figure out exactly what part of your income will be taxed by whatever your tax rate is. Remember that. Consult a tax professional if you need help with this. But this is a good thing to take advantage of, as long as you know what it is, what your limits are, how much you're able to deduct. And it's a good thing. Check us out for any more tax tips at www.jeopardsanthony.com. And if you could, hit a like and subscribe, and we'll be back with more tax videos next week.